Plane door blew off mid-flight. 2 fatal crashes killed 346 people. Cash burn hit billions. The stock was left for dead. Now Boeing just turned profitable for the first time in years. The backlog is $636 billion, and the new CEO is running the most important turnaround in American industrial history. So is this a comeback or a trap? Boeing's collapse is the most brutal corporate failure of the last decade. 2 737 MAX crashes. Lion Air and Ethiopian Airlines killed 346 people due to a flawed automated system Boeing knew about and failed to fix. The FAA grounded the fleet worldwide. Then COVID erased airline demand entirely. Then in January 2024, a door panel blew off an Alaska Airlines 737 MAX mid-flight. The FAA imposed production caps. Boeing burned billions in cash, and the old CEO was fired. Boeing went from America's crown jewel of manufacturing to a company that couldn't build a plane safely. The stock cratered, trust was destroyed, and the question shifted from will Boeing recover to should Boeing even survive? In August 2024, Kelly Ortberg took over as CEO. He's a Rockwell Collins veteran who relocated near Boeing's factory floor. His doctrine, fix first, produce later. The results are showing. Cash burn dropped 95% from $4.3 billion to $200 million. Q4 2025 revenue hit $23.9 billion, up 57% year over year. Full year 2025 revenue was $89.5 billion, with net income of $2.24 billion, the first profit in years. Boeing generated positive free cash flow of $375 million in Q4. Production is ramping carefully. The 737 MAX hit 42 per month. Target is 47 by mid-2026 and 52 by year-end. Each plane generates roughly $75 million in revenue. At 50 per month, that's $45 billion annualized from the MAX line alone. Boeing reacquired Spirit AeroSystems, the supplier that built the fuselage that failed. Bringing it in-house gives Boeing direct quality control over the part that nearly killed the company. Defect rates on the MAX are down 30% since 2023. While commercial recovers, defense is printing stable revenue. Boeing locked up $13 billion in new defense contracts recently, an $8.6 billion F-15 order for Israel, a $2.7 billion Apache helicopter support deal, a $1.8 billion P-8 a Poseidon sale to Denmark. These are long-cycle, multi-year contracts that provide cash flow regardless of what happens in commercial aviation. Boeing is the Pentagon's second-largest contractor. In a world where NATO is expanding budgets, the Middle East is at war, and the Indo-Pacific is arming up, defense revenue is the floor underneath the entire turnaround. Now the bear case. Boeing still carries massive debt. The 777X wide-body is delayed until 2027. Defense fixed-price contracts are bleeding cash on legacy programs. And Airbus has already taken the lead in narrow-body market share with the A321XLR. One more production halt, one more quality failure, one more door panel, and this recovery is over. The margin for error is zero. So what's the chaos capital take? Boeing at 216 is a bet on execution. $636 billion in backlog. First profit in years. Defense anchoring revenue. And free cash flow projected to reach $10.5 billion by 2028. Bernstein targets 298. Susquehanna targets 300. But this isn't a growth stock. It's a broken company, fighting to prove it can build planes again. If you believe Ortberg can execute, the upside is massive. If you don't, there are safer bets in aerospace. Boeing can't fail. America won't let it. It's the only domestic manufacturer of large commercial aircraft. It's the Pentagon's second biggest supplier. It's too big, too strategic, and too important to die. That doesn't make it a good stock, but it might make it an inevitable one. The capital markets are chaos. Embrace it, and I'll see you in the next video.